All right. Uh, Welcome to Tony Forex Academy. So today I'll be talking about why gold is not acting like a safe haven, and here is why. So the truth about gold in 2026: is it a true safe haven, or is it a trap? So why is gold not falling the way it should be? Why is gold not rallying? Sorry, the way it should be, and why it's not acting like a safe haven? So we have the global geopolitical tensions, and this is causing a lot of uncertainty in the markets, and yet gold is not rallying the way everyone expected. Now this is interesting because gold is supposed to be a safe haven. So the big question is, why is gold not buying right now? So I will break down directly on the charts why gold is not just a safe haven. Let's look at point number one. Gold is not just a safe haven. Gold responds to macroeconomic factors, not just fear. So why is this happening? So let's talk about one of the key drivers that is making gold dropping instead of being bullish: the interest rates. Right now, major central banks are holding interest rates higher because of inflation concern, and this is a problem for gold. This is a real problem for gold. So gold does not pay interest. So when the interest rates are high, investors would rather hold assets that actually give them returns, like bonds or even cash. So instead of money flowing into gold, money is actually flowing out. Okay? So gold performs best when interest rates are falling, not when they are high. Another thing that is making gold to be, we're able to see here on this second point, right? Interest rates reduce gold demand. Okay, high interest rates, and then investors prefer yield bearing assets, and we know very well that gold is an unyielding asset. So when interest rates stay high, investors prefer bonds or even cash. All right, so gold, we only expect it when the interest rates start falling, and you're able to see the G20 countries that have listed here, and how their interest rate, the current interest rates. Okay, so another thing is we are having another major factor here is the strong US dollar. You can see this chart showing the dollar index, how it's performing currently. So gold is priced in dollars. So when the dollar is strong, gold becomes more expensive globally, and that demand for gold drops. Okay, so right now investors are running to the dollar as a safe haven, not gold. So the real safe haven at the moment is actually the dollar. Okay, another thing that most traders do not look into is the bond yields. Okay, so let's talk about something that most people do not think about: small retail traders, because right now you need to think like an institution. Okay, when this yield goes up, investors can earn solid returns with a low risk. So ask yourself, why gold, which pays nothing, when you can earn at least 5% or 4 to 5% elsewhere on these yields? And that's why gold is struggling, because bonds will always outshine gold. Bonds pay interest, gold do not. Okay, another thing is the liquidity and safety. US treasuries are considered ultra safe and highly liquid. Another thing is the tax efficiency. Municipal bonds offer tax-free income, especially attractive in high tax environments. All right. So another thing is the inflation myth. Now, here's something that many people get wrong. People think inflation automatically pushes gold up. No, that's not entirely true. What really matters is real interest rates, which is the interest rates minus inflation. So if inflation rises but central banks keep rates even higher, gold actually falls. So gold reacts to real interest rates, not just inflation. Gold is not always bullish all the time. So inflation doesn't make gold bullish all the time. The current situation that we have, it's an oil driven inflation. So central banks decide to stay hawkish, and we have seen that during the latest FOMC meeting. Jerome Powell was very hawkish in his speech. Another thing right now that is happening is investors are not rushing into gold, they're rushing into cash. Money market funds are booming, and traders prefer liquidity and safety with returns. So in today's market, cash is actually more attractive than gold, and that's why you've seen the dollar doing quite well. All right. Another thing that could be happening, which you should not forget, is gold already had a strong rally before all this happening. So what we are seeing now is profit taking. Smart money buys early and then sells into the news. So retail traders will always chase, but institutions will decide to take profits, and that's what we are seeing here. Okay. And liquidation. Okay. So in times of volatility, traders don't just buy gold, they also sell it. And why so? And this is to cover losses in other positions. So gold becomes a source of liquidity, not just as a safe haven. You need to pay attention to these. So another thing that is happening here is geopolitics. Here is the reality of modern markets. Geopolitical tensions alone are not enough to push gold higher. Okay? This is not enough. Geopolitics is not enough to push gold higher. After the initial shock, we saw that gold pushed higher to around 53, 60, 70, then it dropped. So after this, the market focused the shift on interest rates, inflation, and the dollar. So in this instance, macroeconomics will always win. Another thing that we are here to talk about is, let's look at this is oil-driven inflation. So what happens? Let's connect the dots. War pushes oil prices higher. Higher oil prices increases inflation. Central banks keep rates high, and then this puts pressure on gold. So indirectly, rising oil prices actually is bearish for gold in this environment. All right, and we've seen that. So the big question that you need to ask yourself is, when will gold rally? That's what you need to ask yourself. Okay, when actually do we expect gold to move up? What you need to watch for are these conditions: falling interest rates, weakening US dollar, recession fears, and when the central banks decide to cut rates, monetary easing. That's when you need to start buying gold. But in the moment, either you know how to trade gold carefully, or you just keep out. So last but not least, gold is not broken. In this instant, macroeconomic factors matter more than just fear. In today's market, we are looking at interest rates, the bond yields, how they are doing, and the dollar. These really matter more than just fear. And until that changes, don't expect gold to behave like the classic safe haven. So if you find this video helpful, ensure that you subscribe to this channel for more market breakdowns like this, and let me know on the comment section. Are you buying gold or are you staying out? Thank you for listening.